All right. Good morning, traders. Happy Saturday. It is December 20th, the birthday of the two most important people in my life, or at least my childhood for sure. My grandma and grandpa were born on the same day, same year, in the same small town in rural southeast Kansas, believe it or not. All right, Michael, you got your tea ready to go? I am finishing my one and only cup of coffee a day, and then I will move to hot tea for sure. I don't like to drink too much caffeine. One cup a day, that's it. I hope y'all had an awesome week of trading. We just finished up finally December OPEX week, and I did really well trading OPEX. Took some profits on some dip buys and day traded really well. I had a couple of losers, but definitely more winners than losers. And anytime that happens, in December, especially OPEX week, I am happy with those results. And I hope y'all had a good day or a good week of trading as well. We're going to get started here. SPX is what I intraday trade every day. So I like to get an idea of what the SPX chart looks like from a top-down approach. It gives me a idea of what type of swing trades I would be looking for. And SPX is in a bullish trend. We have been in a bullish trend since April. We've got some pullbacks to the bull channel. That's the 236 and the 382 fibs, but never even close to breaking the trend and getting below the golden Fibonacci level. So my focus is still to find trades to the upside in the strongest sectors in the market. Let me show you that really quick here. I use koifin.com, and the time frame that I'm most interested in right now happens to be the month to date. In December, a lot happens, including rotation. Rotation out of the names that were so hot in the during the year, that is people taking profits on those names and moving it into other areas of the market heading into the first quarter of 2026. So the month to date, that's going to be December 1 until December 19th. And the sectors that were on the top here at the beginning or the middle of the year are different than what's on top as far as looking at the best performing areas of the market in December. And that is further proof of sector rotation. Now, how long does that last? It usually lasts during that first quarter of 2026. There will be dip buy opportunities in some semiconductors and some tech related names, the Mag 7s, the things that everyone likes to trade. But just because I like to trade a name doesn't mean that that is the best setups going into the first quarter of 2026. So I really try to keep my emotions out of it and just trade what the charts are telling me. And over the month of December, they're telling me that the airline sector is leading the way to the upside. It's up 9.24% for the month of December. Then metals and mining is in second place. It is up about 8.32. Then you have regional banks. This is going to be tied to IWM. and small caps. GDX, gold miners, obviously tied to the GC futures sector. And topping out the top five is consumer discretionary. Now, a lot of this has to do with the very nice rally that Tesla finally had, but consumer discretionary is in the top five, followed closely by financials. So, on my watch list for this week, these names that trade within these sectors you're going to see on my watch list, and I will intraday or trade the popular names like Apple or Amazon, Google, etc. I will trade those more like putting on a trade for a day trade or a couple of days on a nice dip into a buy zone, but they're not my focus for swing trades going into the first quarter of 2026. All right. All right. Let's go back to the SPX chart and talk about what last week's candle looks like. It is a very bullish candle. It's a very bullish candle because it's a hammer candle. A hammer candle is bullish. It's going to have a big bottoming wick with a small body and closing up towards the top. And that's what SPX did last week. It also closed within the body of the previous candle, just like the week before did. And so that means we have week, two inside candles on this weekly chart. If this breaks to the upside, then of course I'm targeting 69.20 and the even 7,000 that it seems like so many people in the market are targeting for SPX. I chose 7,000 just because it is the big round number, a psychological number that if we can make a new all-time high, this is what a majority of people are gunning for. And so that fact will often lead price up to that level. And then most generally, you're going to see a retrace from that big psychological level back down towards the previous all-time high, where then if buyers are still interested in paying 69.20 for SPX, then we can rally back up. So only time will tell, but I can tell you that this is bullish candle structure here going into next week. Next week's a holiday week. Holiday weeks are different than normal weeks in that there is often fewer participants in the market, so lower volume, which can lead to very dramatic moves to the upside or the downside with that lower volume. So just be aware of that. My plan is to trade with smaller size and wider stops next week during the holiday week, giving myself flexibility for maybe over exaggerated moves in against me if I'm in a position. That's why I would want to have that wider stop and less allocated to the trade, because say that I'm comfortable with a loss of $500 on a single trade, and I typically, have a stop set and would normally lose about 250 in a trade per contract. And I'm completely comfortable with that. Obviously, if I'm comfortable with 500, well, if I only allocate that 250 per contract per trade and it went to zero, that would not affect me, my first off, financially, my account, but also the emotions tied to losing the $250. So that's my plan as far as trading next week goes. That's more on an intraday um, basis. For my swing trades, I will still treat them the same allocation and just plan to scale into trades and wait for confirmation on trades. So that is what our weekly chart looks like. The immediate support is going to be this 9 EMA here on my EMA cloud at about 67.70. And then this previously tested buy zone down here at 66.90 by 65.21. All right, looking at the daily chart on SPX. Give me 1 second here. This is different because it is a new week going into next week. I want you to look at Thursday's candle closed inside of the previous day's candle, inside of Wednesday's candle, and then yesterday's candle broke out above that body and closed above that body. That means we created a buy zone or a demand zone down here on the daily chart. And so for next week, my major zone to watch for dip buys, and this pertains to my swing trades as well. So if I see SPX coming into this buy zone and I'm interested in trading, let's say Bank of America to the upside, I want to take a look at where Bank of America is sitting at and see if it is near my buy zone. And if it is, because the overall index is down in a buy zone, I could take the trade there. As far as the immediate resistance, that's going to be this double stack of edges up here, a monthly edge and a weekly edge. You have resistance at 68.45, and then of course 69.20 is the all-time high up there. But my buy zone on the daily chart was created on Friday's candle, and I like this area for dip buys next week. As far as the 4-hour chart goes, this is a trade I started in the SPX room late Friday. It's a 618 to 887 trade is what that is. But as far as the 4-hour chart goes here, we did not create 4-hour inside and up candlestick structure. That's why I'm using that daily candlestick structure for my buy zone. We are right up here at or near the double stack of edges. If there is buying happening on Monday morning and we can get up and above this 68.40 to 68.50 level on SPX and hold that on retraces as support, I'm loving my trade that I put on yesterday for a target up here at 68.92 by 69.20. So just looking at SPX, it tells me that the market is in a bullish trend and my focus wants to be to the upside on dip buys. As far as the other indexes go, you have technology. We created an inside and up right here on the NASDAQ on Friday. You have immediate resistance up here at 25,738 by 25,880, and then a target for the week up near all-time high. Now, if buyers are stepping in more so in small caps such as the Russell, then they more than likely will be leaving some tech names, stepping into the small caps or the Dow. I want to really pay attention next week to see if I see signs of that. You can see the Dow came up to resistance on Wednesday, Thursday, and not quite on Friday, but it is stronger relative over the last month than what the NASDAQ is because it made a new all-time high on Monday. So again, I will be watching the Dow to see if it can hold this immediate support here at or around 48,232. If it can hold that and starts moving back above these resistance areas, makes new all-time highs, I want to be a part of that move, and that's why a lot of the names that you'll see on my charts are related more to this area of the market. So let's get into my bullish watch list for this week. Alcoa created a buy zone down here last week. It never made it to my entry where my alert was to swing trade it last week, and it created a higher buy zone. So now I'm going to move that alert up. If I get an opportunity and Alcoa pulls back to 46.84 by 44.50, I'm looking for a target of first 51.02, then 54.02 by 57.88. That's going to be a risk of about $2.30. The reward is approximately $4 plus, and then obviously 8 to $11 up here in the sell zone. So nice risk to reward on that trade if I get the pullback. American Airlines, I've showed you the Jets ETF is screaming to the upside. American Airlines, though, it is not. I have it still on my watch list, but there is this area of resistance here, and the risk to reward isn't worth it on this name, or isn't high enough for me to take a trade. So I will focus more on Southwest that has a better risk to reward. As far as Ally goes, again, another name I was looking to trade last week, but it just didn't make it to my buy zone last week. You can see here's last week's candles. It never came down to 42.47. It created a higher buy zone, and so now this week I'm focused on 44.97 to 43.91, about a dollar risk there. This immediate resistance area in here is better than a 1-for-1, so that is a valid trade, and my first targets would be 46.24 to 47.12. Then I'm targeting the sell zone 49.19 to 56.61 on Ally. Up next is Barrick. This is a gold miner, right, in that GDX leading sector for strength. Barrick, again, another name that did not make it to my buy zone last week, so no trades on it. It created a higher buy zone, and so now I'm looking to buy a dip 43.28 to 42.04. That is $1.24 of risk. The first target is just under $2, and then 47.24 by 49.90 are the next two targets on a swing trade for Barrick Gold. BAC financials are doing well relative to the overall market. BAC came very close to my buy zone last week, but not quite. My plan for BAC is still to trade this buy zone, but I have a lower weekly edge up higher at 54.04. So I would start a position near $54 with half allocation plan to add in this buy zone. Then targeting 55.82, 57.02, you can see the values 58.13, and finally right at $60. These are extension targets up there. Citibank is a financial name that is doing well. It has candlestick structure. It's not at all-time highs. So I have candlestick structure to work with on my targets rather than just extension targets. Now, granted, this candlestick structure is back from 2008, but it is still important for resistance levels above. So my buy zone on Citibank is going to be 112.22 by 110.55. That's a risk of about $1.70, about $1.70 of risk. My initial target is 115.06, then 118.20, and finally that sell zone 122 to 130. Up next would be Cleveland Cliffs. This is another name, a metals and mining name that I am interested in trading from a buy zone of 1272 to 1214. Targets 1409, 1541, 1647, finally 1727 by 1810 up there. Now, Cleveland Cliff does not have a very high ATR. It moves about $3 in a month. So if I'm looking at this and I need a $5 move, that means I need to buy myself at least 2 months of time for this final target. So I think about that when choosing my expiration. And on this name, if I were to get an entry next week, I would be looking out to February or March expirations there. Cisco is a name that we actually got in, and we have taken profits. And when I say we, I mean in the trendy room at Simpler Trading, where I trade and my trading partner, sorry, Trendy John trades live every day with our members. We got into this trade, added down here on the 17th of December, was actually able to trim out twice there at $78 and $79. And now I'm targeting 80.51 and above there $82. But if you are not in Cisco and you're interested in trading Cisco back to the upside, uh, we created a buy zone here from the Thursday inside candle to the Friday up candle. And so the buy would come in at about 77. I would still use this zone to add to the position. For me, I'm not going to be trading this unless I were completely out of my position. And right now, for the runner contract, as long as it holds 77.98, I want to stay in the position for these upper targets. Delta Airlines, another airlines name that I'm interested in buying a dip on. Now, my buy zone from last week was not even, price never even came close. I still like this for a buy zone. If airlines were to show some weakness, and get down to 67.69 by 65.12. I like that for a buy the dip. I don't necessarily want to trade off of the lower weekly edge this week because the the range is very, very tight. It has been consolidating here, but if you would want to trade this from the bottom of this consolidation range, that's going to be 69.81 by 69.19. So very small risk here in this zone that if you wanted to try a trade on a dip back to 69.81 by 69.19, that is valid, and you would be targeting 71.97 and 74.80 and 76.86. For DuPont here, another outperformer in the overall market. I do have a alert set at this week's lower weekly edge. And then if I get an opportunity, because I have inside and up candlestick structure there, that's towards the bottom of this really nice rounding bottom here. I would start a position here at or around 40.36. Then I would be targeting 41.65. If we get the deeper dip and I'm able to add to full allocation in this buy zone of 39.90 by 38.93. Sorry, guys. Then I'm going to move this first target down to about 41.32. But nonetheless, I like the price action on DuPont and will look to start a position on when this alert goes off. If the price action, if it doesn't look like a falling knife making lower highs and lower lows, then I will start a position there, but otherwise I will wait for this buy zone. GDX, thank you, Rom. GDX, the gold miners ETF here, very strong as gold is very strong. We never made it down to my buy zone from last week, so I created a new buy zone here at 84.46 to 83.12. A dip back into this area would be a buy for me. That's about $1.30, $1.50 of risk, and the reward is $3 and some change. Then I'm targeting these extension targets above on continuation to the upside in the gold miners sector. Gold never got my dip buy from my buy zone last week, but we did create a bottom of chop type area that lines up with a couple of things. The 9 EMA here on the daily cloud, my lower weekly edge. So I've got an alert at that lower weekly edge and this new buy zone. I would be playing it back up to 401 by 403.30. Then if we make new all-time highs, I will draw Fibonacci extension to get those extension targets. But gold really has just consolidated for 1, 2, 3, 4, 5, 6 consecutive days. If price pulls back into this buy zone, I get that confirmation and I play it back up to these targets, great. If gold falls back into this buy zone and I get no confirmation, we just keep making lower highs and lower lows in this zone, then my focus shifts back to the original buy zone from last week, which is going to be that 385 to 382. All right. All right. Let's look at Halliburton. This is more of a longer time frame trade for me. This is a lower yearly edge, and Halliburton, it got clobbered this year, but it has, or not necessarily this year. Yeah, it was. It was at the beginning of the year where it got clobbered. All right. And it's retraced much of that clobbering, but it came up into the bearish golden pocket. And so it did see a pullback over um, last week and the week before. Now it created a base right here at that lower yearly edge and gave me a buy zone to look to go long Halliburton. Now, again, this is something I'm looking at for a longer term trade. So I'm talking June expiration. I'm not going to call it a leap trade because I don't want to trade it for the entire year, but I would like to trade it to the 30 dollars, 30 and a half dollar range up here. And for Halliburton, I'm going to need time from here to about a month to get up to that $30 target. And then my next target on a 6-month trade is going to be this yearly edge mid here at 33. So I need to give myself plenty of time because of how this name moves. It's pretty slow. So I would be looking at June expiration, playing this little dip back into this zone and then targeting right at $30 and then $33. Hecla, another gold miners here. I'm not going to trade this week, but I'm not going to take it off of my watch list. I'm going to trade it through GDX rather than picking one name. All right. So, because of that, I am just leaving it on my watch list. But the reason why I'm not wanting to trade it this individual name is because it is right here in a sell zone. I don't want to buy calls in a sell zone. Even though the zone has been tested, it still hasn't broken out and above the zone. So I'm leaving it on my watch list, but I'm more interested in trading the gold miners ETF itself than I am Hecla. IWM is definitely on my watch list because I'm watching for strength in small caps and some continued profit taking in big tech. All right, so IWM basically consolidated Tuesday, Wednesday, Thursday, and Friday right here above this zone that I would be in or that I'm really watching. You got the daily 21 and the daily 50 in this zone. You got an inside and slightly up candlestick structure from Thursday to Friday, but this is the zone that I will be watching this week for potential swing trades out of. And then I'm targeting these levels here. Now, the Russell and IWM both made new all-time highs on the 12th of December. So first target's going to be that upper weekly edge, but the next target's going to be back up at that all-time high. And then these are extension targets. So keeping a close eye on the Russell, looking for some potential rotation there, continued rotation, I should say. J&J Healthcare has been strong over the last couple of months. J&J finds itself pulling back. J&J's buy zone for me is 202.54 to 199.01. And then I would be targeting back up here towards where we topped out uh, early this week. So J&J remains a watch for me on weakness, but I'm not going to jump right in to it on Monday. I would need further weakness to the downside, another day or two of downside price action, maybe some profit taking from this all-time high, and then I get interested down here. So I have an alert just above that zone so that I can be aware when price gets down there. All right, let's look at Southwest Airlines. Southwest has a buy zone down here. It had this buy zone down here last week. It's still my buy zone, 38.20 to 35.31. Now, price did come down to this lower weekly edge on Friday, but if you have traded the airlines sector before, you can see a big sudden move. And I still think that price needs to come back and test this zone. We're making lower highs here every day Tuesday, Wednesday, Thursday, and Friday. You're making lower highs here. That's why I'm not real interested in buying this off of the lower weekly edge. I'm going to leave my buy zone the same. And then on the event that we get a pullback to my buy zone, if there is an inside and down candlestick structure here, I will make a first target closer. But for now, this is my trade plan for Southwest Airlines, targeting 43.22, 44.55, and 47.92. Another healthcare name that took a beating this year but has rallied off of those lows is Merck. Okay, Mark created a buy zone down here at 99.03 to 96.79. That's about a $2.25 risk. The reward is going to be right about the same, $2.50 something cents on that first target. But the upper monthly edge here at 103.11 is a target as well, and that's going to give you about a $4 reward. So I did not have the upper weekly edge here as a target, but depending on what the candlestick structure looks like. Apologies, guys. I woke up today and it's 40 degrees in Central Florida, and it's done a number to my sinuses. Anyway, I will watch candlestick structure here and may take some profits here on the way up to 103 and 105. NEM, Newmont Mining, again, you got a buy zone down here at 98.36 by 96.50. Now, if I'm in GDX, I won't be in Newmont Mining as well. I would just trade it through the ETF. But if GDX doesn't pull back to my buy zone, but Newmont Mining does, then I would take a stab at it here at 98.36 to 96.50. That's about $1.80, $1.85 of risk there, and the reward is going to be about $3.40, and then these extension targets above. All right. PACS is still on my watch list. I like it for a pullback. This is a 618 to 887 trade. Now, if this thing comes up here and smacks the 887 and the upper yearly edge before I get a pullback buy, then the trade has already played out and I won't trade it. But my plan is to do a starter position here at about $34 and then leave allocation to play this buy zone down here. Again, targeting 39.80 and 43.92. But if we go here, before we go here, no trade, because the 618 to 887 would have played out, and I'm not interested in taking it if the trade idea has already played out to target. All right. Schlumberger, this is another one that's been beat up this year and it is struggling. This is more of a longer term trade for me. The buy zone is down here, the sell zone is here. It's $5 plus. It's $5 to $15 up to that target. And you have a monthly ATR of about $5. So that means for the top of that target, I would need to give myself about 3 months on a trade like this. Now, let me mention, I will not get into that longer term trade on Halliburton and get into a trade on Schlumberger because they trade in the same area of the market. No need to over allocate there. So one or the other on those two names. Steel Dynamics, unfortunately, I missed an entry on Steel Dynamics. My zone to trade was down here last week. I got an alert on Monday. By the time that I looked at this, because it happened early Monday morning and I was teaching and focusing on day trading at the time that it popped down into here, by the time I looked at it, it was out of my zone by a couple bucks. So I just ignored it and I wish I would have just taken the trade. That's all I can say about that because it was a beautiful move. I didn't take the trade. That's one I missed last week, unfortunately. I have the alert set back for the buy zone this week, and the targets are above. These are extension targets above the current high that you see, and those would be my extension targets. This is my buy zone. All right. And last but not least is another bank name, a WFC. Because I got out of my Bank of America trade, I can put some more focus on financials. Um, Wells Fargo has a bull channel buy the dip opportunity right here at 91.14 to 89.21. You got a little less than $2 of risk and over $2, almost $3 to first target. And then these are extension targets above. So Wells Fargo is a buy the dip in this area for me with confirmation. I'm not just going to blindly buy the bull channel. I need to see higher lows inside of this bull channel and then take the trade back up to these targets. If I don't see those higher lows inside of that bull channel, then my focus shifts to this candlestick structure right down here where I'd be looking for price to pull back to about 86 and a half and then play the buy zone down here. All right. Several questions came in while I was going over this, so I'm going to take a minute to answer these questions and then I will wrap this up. So, Claudia asked, you would take the confirmation on the 2 hour. Claudia, if I'm trading a trade that I plan to be in for a month off of a daily buy zone, I'm going to look at 2 hour candles and depending on the time of day and how much time, how many candles I would have left, I might even look at 1 hour candles. So I'm going to say 1 to 2 hour candles. All right. Hello, Tech Trove. Good morning, Randall and Rom. Rom asked, do you need a month because you're going from a weekly lower to a weekly upper? Ron, I'm going to choose most all of these trades. I would be choosing January expiration unless my target is too far according to ATR, the average trading range for a month. So look at Wells Fargo here, it has an ATR of $8. And let's say that was targeting 101 up here and I got the trade at 89. Well, I need longer than a month to get to this target. So in this case, I would choose 2 months to expiration. So I pay attention to what the average trading range is to come up with my expirations. And I would rather have too much time than not enough time, but not way too much time. Okay? Claudia says, when you shade the buy zone, do you include the inside candle complete? Yeah, Claudia, I have, let's see, let me just pick a name and I will show you real quick how I would draw a buy zone. All right. So we're looking for inside candle and then the up move. The way that I draw this buy zone is I use the body of the up candle in this case and the lowest point of this 3 candle formation. Okay. Some people like to draw their buy zones wider to include the body of that inside candle. And really, it's personal preference, to be honest. So some may use this inside candle and include it in the buy zone. That's going to be up to you. This trade here would have a risk of about $3.12. This trade here would have a risk of about $1.50. And the advantage of having the wider buy zone is going to be that if price comes down to 677 and just skyrockets, then obviously the more narrow buy zone would not be hit and wouldn't trigger a trade, and this one would. The advantage of a more narrow buy zone is smaller risk. Okay. Awesome, DMC. Glad that you picked up some IWM probably on that dip last week. Very good. Rom says, so create a diversified portfolio of trades. I do. I do not over allocate all my money into one area of the market. When I go to bed at night, my exposure needs to be spread out a little. And the reason is because back in 2018, I did not do that. And I went to bed with huge amount of risk in tech. And it, I got clobbered. I got clobbered. Okay. I lost 40 to 50% of my account in um, a matter of a couple weeks. And ever since then, I don't make that mistake. All right. Oh, good morning, Dush. All right. So that is my analysis going into next week. Again, guys, I just want to remind you next week is a light trading week in that it's a holiday week. Half a day on Wednesday, markets are closed on Thursdays, and then we come back and trade on Friday for one day before a weekend and another holiday week. So the next couple of weeks are going to be lower volume, which leads to more dramatic moves. Less people participating often leads to more dramatic news. I know it sounds counterintuitive, but that's the way it is. And yes, if you're not subscribed to the channel, be sure and subscribe to the channel. I put out videos every week that are technical analysis videos, psychology, trader psychology videos. I try to do several short videos each week, one long form video, and of course, our live session here on Saturdays. I answer all the comments and I reply to your questions. So if you ever have a question, put them in the comments. And please take a minute, hit the like button. I would appreciate it. I hope you all have a wonderful weekend, and I will see you in the next video.